What's up, world? This is Stocks in the Streets, where we focus on pure investing without the baking soda, boric acid, or all the other crap analysts try to throw your way. Simply put, we give it to you straightforward, no cut, investing made simple. So let's face it, there are only three types of people who are ever going to watch this video. Number one, the investor who absolutely hates Bitcoin, blockchain, or anything of the sorts. You know, the people who are completely anti-cryptocurrency. Number two, the type of investor who believes that Bitcoin is the wave of the future. It's basically going to be the death of other forms of currency. These people tend to absolutely love Bitcoin and are willing to go to any means to defend it. Or person number three. This is the person who has watched the news, talked to some friends about their cryptocurrency experience, and kind of seen all the hype. And right now they're kind of on the fence. I began following the stock market when I was around 8 years of age, and I've been in love with trading ever since. Now, don't get me wrong. I've made some great decisions and have been rewarded handsomely. And I've also made some crappy decisions and woke up like WTF just happened. In this video, I'm going to help you to answer some very important questions about cryptocurrencies, namely Bitcoin, so you don't have to waste countless hours listening to everyone's opinion about why their approach is the best. Anyways, let's start off with a few facts. Fact number one, Bitcoin is a speculative investment, at least for now. This is probably the number one reason that I absolutely hate Bitcoin. It doesn't make sense, especially in reference to my investment strategy. Fact number two, Bitcoin is up over 2,000% in 2017 so far. Speculative or not, I can't deny the obvious returns on investment that many people have achieved by trading Bitcoin. And fact number three, which is also one of the first things I learned about investing, is that we should try our best to not be an emotional trader. Now, of course, there will always probably be some emotion involved, but it's important to keep this in mind as you deal with any form of investing. This is not exclusive to just Bitcoin. So why are these three facts so important with my decision about cryptocurrencies? For beginners, I try to look at all of the potential angles when it comes to making a final investment decision. Personally, after looking at the pros and cons of Bitcoin and a few other cryptocurrencies, I decided that it is an absolute horrible idea. Now, did I turn my back on crypto and walk away? Well, not exactly. You see, once I remembered to put my emotions aside and stick to the facts, instead of feeling like I need to prove to the world that I am right about Bitcoin or other cryptos and people who disagree with me are wrong, I again took a look at the numbers. Although keeping in mind that past performance is not necessarily an indication of future performance, but I mean, looking at the numbers, there was definitely potential there. I found myself torn between sticking strictly to my investment strategy and trying to decide if Bitcoin was right for me. Now, as I've said before, I absolutely hate Bitcoin, and this applies to most cryptocurrencies. So I refuse to take a chance with my hard-earned money. So this is what I did about it. First, I went through my depreciating stuff that we had around the house, and some of it was in our storage unit. So that included my Atari, some old fitness equipment, an older model flat screen TV I really didn't use, and just some other crap in general. The next thing I did was list all that stuff for sale. Some of it was on OfferUp, eBay, or wherever I can get rid of it. Basically, I sold it all. Now, keep in mind that all of that stuff I sold was only losing value anyways, which is really no different than losing on an investment. So from one point of view, I really just cut my losses by selling it. Then I took the money that I made from selling all of that stuff we had sitting around, and well, as you can guess, I waited for the next pullback and brought into Bitcoin. Luckily, Bitcoin has continued to run. However, instead of trying to write it out forever, I implemented part 2 of my crypto strategy, the 40-30-20-10 rule. I told myself that when I could pull out 40% of my initial investment without dropping my initial basis, I would do so. So that's what I did. I did the same thing at 30%, 20%, and 10%. So here's a quick visual. Let's assume I invested $100 into Bitcoin. Well, and again, I'm not going to calculate fees because I figured all of that in also. But let's assume I put in $100 into Bitcoin. Now, when Bitcoin was to go up to a point where my $100 was now worth $140, that's after fees, then I pulled out the $40, still leaving me there about $100. And when it went back up to where the value of what I had would be up to $130, I did it again and pulled out 30%. I repeated that for 20% and 10%. Well, as you can see, 40, 30, 20, and 10% means I've pulled out 100%, or per this example, I've taken my $100 back out. Remember how earlier I mentioned the importance of not being an emotional investor? Well, keep in mind that the money I used was money from selling off random stuff that was just sitting around the house anyways, which I already had no emotional tie to. On top of that, I was able to pull out all of the money that I invested, which pretty much removed all emotional convictions that I may have had towards Bitcoin. So now I am playing with the house's money. So if Bitcoin crashes, well, so what? It's not my hard-earned money anyways. If it continues to soar, cool. I'll take that too. In the meantime, I've taken the money from selling stuff around the house, which was once invested in Bitcoin, and now have it dumped into an S&P 500 index ETF. If you watch some of my other videos, you will know that I'm still a big fan of the 90-10 approach to investing. So this keeps me within my comfort zone. I say all of this to say, I don't really care if you decide you are for or against Bitcoin or any other crypto. Just be wise with your decision making and don't risk what you aren't willing to lose. So yeah, I am invested in a few different cryptocurrencies currently, but my risk exposure is 0. Now, if you came here looking for all the fancy terms and the different forms of reading charts and the reasons why people think crypto is great or thinks it's horrible or I'm not that guy. I'm not going to use any big fancy words. That's not my style. I'm trying to keep it simple. In closing, I will share this piece of advice with you. When it comes to making money, sometimes it's not about what you like, but what you understand. If you can research something and understand how it works, it may be worth considering. Likewise, if you begin to research anything and it doesn't make sense to you, don't invest in it. You are going to hear some analysts who rant and rave about tulip mania and bubbles and things like that. And at the same time, you're going to hear other analysts who are all in and are huge supporters of cryptocurrencies. But every once in a while, you have to sit back and realize that an analyst is simply someone who has examined something in detail. Heck, if you've ever stood in the mirror after you got out the shower and wonder how long that mole has been on your back, by definition, you are an analyst. And I say all this to say it doesn't take a rocket scientist to make savvy market decisions. But be careful of the smoke and mirrors that many people will try to throw your way. So if you like this video and want to see more, click below and subscribe. I would greatly appreciate it. If you have any questions or important points that need to be added, list them below in the comments. Oh, and if you ever see me driving a Lamborghini, that means that Bitcoin has probably reached like $1 million. Anyways, I'm out. See you next time. Stocks in the streets. No cut, no shake. We're water whipping your investments for the double up.